Hi, everyone. Thank you guys
Hello.
for coming out. I am just standing in representation for MKE Tech Hub and just wanted to say thank you. During this Tech Week, we have tons of events. We have over 40 events that include startup founders, technologists, innovators, and educators. We also wanted to thank our sponsors, Hush Blackwell, Northwestern Mutual, and all of our Wisconsin Startup Coalition partners. We also wanted to just thank you guys for the time and coming out and doing this wonderful fireside chat. We wanted to encourage you to continue to participate in Tech Week. If you have any questions, please feel free to reach out. But I'm going to allow Cullah to introduce who our speaker is for the day. And
I got one.
oh, your mic
Thank
up,
you.
sorry.
Yeah, thank you so much. Thanks everyone for being here in person and everyone watching virtually. Good afternoon and welcome. I'm honored to be here today to discuss with Karl Gouverneur about the most disruptive, innovative, and fastest adopted financial technology in known history. That's Bitcoin and cryptocurrency. Karl is well known by many for his years as CIO, CTO, and head of digital innovation for Northwestern Mutual. Now Karl is a highly accomplished entrepreneur, advisor, angel investor, and current CTO of Struxtion, providing financial services and banking solutions for the commercial construction industry. And I can think of no person that better from our community that is more qualified to speak on the fundamentals of these technologies and how it has changed the world's approach to finance and technology. I want to say one thing before we do start, that nothing here should be conceived as financial advice in this conversation. So that should be between you and your financial advisor. So with that, I want you guys join me in welcoming Karl Gouverneur.
Thank you, thank you. But Cullah, how about you? You're involved in this crypto world. How about a little bit about yourself? What's your background?
Sure. Yeah, my name is Cullah. I'm a musician, technologist, and creative entrepreneur here in Milwaukee, Wisconsin. I've been a musician, open source musician, for about 15 years now, releasing all my music in an open framework, interested in Creative Commons and collaborative-driven networks and using creative assets. And I'm currently working on a couple different ventures. The one more notable that I'm working on called Firebird Media, which is a decentralized music and media protocol.
Very cool.
So Karl, what have you been up to? A lot of people here know you. Maybe some of them haven't seen you in a little bit. I know that you were talking about how you miss your parking pass from across the street already. So what have you been up to since some of these people want to know? We all want to know. What have you been up to?
That has nothing to do with Bitcoin, but okay, fine, we'll talk about it. So good afternoon, everyone. It's great to be here. Great to see some friends. Great to see people that recognize me, and you worked on my teams in the past, and so many people that I impacted at that place across the street. So what I've been doing, so it'll be 3 years in January since I left. And immediately after I left, I realized I have time, and I've never had no responsibilities in my life, ever. Like, job responsibilities. You graduate from college, then you get a job, then you quit, but you have a job lined up, then you quit, another job, you quit, you get another job. So I never really had more than a 2-week vacation, ever. So I decided to take 6 months off and figure out, life and go to Europe. And I left to go to Europe in the middle of January. I was in Paris for about 30 days. And then the NBA shut down. You all remember those days, right? Yeah. Paris shut down. So the Eiffel Tower, the Metro, the Louvre. All of a sudden, I'm with my wife in this Airbnb, and she's asking me, wait a minute. I love it that we're in Paris, but I don't want to be hooked up to a ventilator in France. Remember the ventilator thing? Yeah. And remember the whole Trump conferences every day and Dr. Fauci and all that stuff? Well, we were in France in the middle of March when that happened. So we had to come back. And I got 1 month into the 6 months, which was a lot of fun because Europe was empty. No Asian tourists, because remember, they were dealing with it in China, right? No Asian tourists. So the place was somewhat more empty than normal. So we had a great time, but we had to come back, and so that's life. After that, I spent the summer kind of figuring out what do I want to do, and I ended up deciding that I wanted to put a bet on myself and go back to becoming an entrepreneur. I was always on the other side during my years at Northwestern Mutual as a as a venture capitalist. We had a fund there. We invested in a few companies. And I always ask myself, wait a minute, I can do what this guy is talking about. I can be a tech CTO for an early stage. But I never really had the courage to go do it. And I did a startup in the late 90s. But it was a different time then. You had to come up with $5 million just to buy servers. Today, you can swipe your credit card and you have servers. So it was just a very different time to start a company back then. I mean, look what you're doing with music and media. You don't have a single stitch of infrastructure. It's all in the cloud. So I recognized that, and I realized, okay, which one of these startups do I want to get involved? I picked one. It focuses on it's a fintech, and I have a lot of experience in financial technology. And it happens to be in a new business called commercial construction, and we're doing okay. We're raising our next round of funding, and we raised $6 million. We're raising another hopefully between $4 and $6 million, and life goes on. My kids have grown up more. Life just gave me a little turn, and it was for the better. So it's all good. Good to be here. Good to see familiar faces. It's good to be downtown too. I took the easy route and parked it at LA. About that. So let's talk about Bitcoin. It's not about me.
So how did you first get involved in Bitcoin? Can you tell us maybe the little basics of when you first heard about it, your reactions, and then at the very beginning, before we start breaking it down, how did you first get into it?
Being a part of a financial services company, and also running innovation, you tend to get involved in early in the process of certain technologies. I heard about Bitcoin for the first time around 2011. I actually built a Bitcoin node. Back then, you could have a PC and put it together and turn it into a node. This is before miners and all that stuff. You could just use your own PC to do it. And I believe I had a bunch of Bitcoin that eventually turned into a PC that I never really used anymore. I actually reformatted the drive and lost all that Bitcoin, and I feel sad about it, but I didn't really care back then because it really was worthless. Then I saw some of the scams and some of the things that happened back in that time frame, 2013, 14, the exchange in Japan going down. What was the name of that thing? Mt. Gox. And a number of things happened. Also from a corporate perspective, we were kind of being told, hey, stay away from that stuff. So I turned into 2013, 14, 15, 16, I turned into a blockchain, not Bitcoin advocate. Back in the days when that was trendy. Blockchain, not Bitcoin. And then in 2000, I saw the run-up in 2017, and I came from it too from the tech angle. Like I understood distributed ledger technology. As a university student, I put together a thesis and a project around distributed technology, distributed databases, and that's a really hard problem to solve. Who's an engineer, developer, programmer in this room? Yeah, there's a few of you. You know how hard it is to manage a distributed database and committing data to the database across many servers. And that was a problem that I remember as a student, as a professional. It was a pain. And so you solve the problem by scaling vertically. You couldn't scale horizontally. Well, blockchain is what's underneath the Bitcoin network. Blockchain is a form of a database. I like the easiest way to describe it is a database without a delete key. A database without a delete key that's distributed around thousands and thousands of computers. So that's how I got into it. I came from the tech angle. Then in the run-up of 2017, when it went from 2,000 to 20,000, I said, okay, wait a minute, I missed on this one. I missed it. I was in this crowd of, no, stay away from it, it's a scam. But then I realized maybe it's not a scam. And then when this next run-up happened from COVID, it was at 3,000. It went all the way up to 69,000 in November of last year. I participated in that. And these days, we're in the everything bear market, right? We all know everything is down. And I'm definitely continuing now to keep buying and keep participating. And we'll talk about it towards the end, some of my beliefs on where things are headed. So,
sure. Yeah. So I guess then The question is, what is Bitcoin, right? I'm sure some people here are familiar with it a little bit, but
Yeah.
can you describe maybe some of the key attributes of what makes Bitcoin special? Because you're saying that blockchain is this underlying technology, but so then what makes Bitcoin special? Why Bitcoin?
So there's Bitcoin with a uppercase B, and there's Bitcoin with a lowercase b. And Satoshi Nakamoto, which is the pseudonymous, we don't know who, if it's a man, a woman, a group, or whatever, but Satoshi Nakamoto probably should have used better marketing in terms of the network should be called something and the coin should be called something, but we just landed on uppercase B and little b. So let's talk about Bitcoin. Bitcoin is the world's first cryptocurrency. Okay, it was the first one to come out. Bitcoin is money, and money has to have certain properties for it to be proper money. Seashells used to be money, but we all know we don't use, if I try to give you a seashell for an iPhone, you're going to look at me and go, I don't need seashells, I want dollars, right? So it's money. It is enabled, Bitcoin is enabled, the network is enabled by the blockchain. And it's the first public blockchain. If you Google Blockchain Explorer, you'll be able to go to the Bitcoin Explorer and see all the transactions as they happen. It is completely transparent. And it's a database that is very good at storing ledger transactions. So if I exchange value with you, it debits your account and it credits my account, or whatever the other way around. There's a lot of accountants probably running around here. They'll probably correct me on that one. But, so Bitcoin is the crypto coin, and it runs on a network that is open and available to anybody that replicates the ledger across the internet. It is the most distributed, most secure database on the planet. Okay? But it does one thing and one thing only, and that is keep track of the ledger. Okay? That's one of its downsides, and thus the reason why other blockchain products have emerged, like Ethereum and Cardano, which I know you're doing work on Cardano and others, because there you can actually have apps that are tied to the database. Bitcoin doesn't support today apps. That notion doesn't exist. And we call them dApps in the crypto world, distributed applications. Bitcoin is the first public digital money that allows us to send and receive value without the need of the banking rails. So if you do your Venmo, and I text you, and I do this with my kids, text them money, send them $50, they got a party or whatever, that's going on top of the banking rails. That is not some fancy innovation that Venmo did or PayPal did or whatever. All those Cash App, all those are tied to the banking rails. Blockchain, and in particular Bitcoin, you can send and receive value instantly at a fraction of the cost globally with more or less a 10-minute final bare settlement transaction. Meaning, you're not going to see what you see if I send you money, don't you see when it comes out of your bank account something that says pending? That's because there's probably 3 or 4 middlemen in between who are all getting a cut out of the transaction, who we need to wait the T+2 or T+3 time plus 2 or 3 days in order for the transaction to settle, for it to be final.
Yeah, with all of that, you mentioned a few things. And one thing I'd like to touch on, you said Satoshi Nakamoto, and so this is a pseudonymous person. So we don't know this person. You mentioned it might be a group, could be an individual. I can ask you, well, 2 things. Like, so the first is, do you have any idea who it is?
Me? No. If I did, I wouldn't be sitting in this chair.
And the second question, I guess, is, so then does this pseudonymous person, do they control it? Or who then controls these nodes? You're saying that
that's a good one.
People are using it themselves. They have to distribute it. They have to replicate it. Who runs it then? Like if it's distributed, who's running it? If there's not some vertical of the central authority that's doing it.
There is no central authority. There is no company. There is no group of people that control the governance of Bitcoin. Okay? Bitcoin changes very slowly, and those of us that either own Bitcoin or are part of the community want it to change slowly. Want to make sure that we double check and triple check, because there's a lot of money tied into this network. And so we don't want to have changes that happen, and in particular changes that change the ethos of what it is. Satoshi Nakamoto produced, if you haven't read it, the Bitcoin white paper back in 2009, I think Halloween of 2008 came out. And the first Bitcoins were mined in early 2009. You can actually see the first block. That is known as the Genesis block. And it's funny what he did, or he or she or whatever, they inserted into the first block the message that was a headline of a bailout that happened in 2009, back then during the financial crisis. He inserted the actual quote from the British newspaper on the bailout that happened, just as a dig to the financial system. Yeah. Did you know that?
I didn't know that. No.
Yeah, just look at the Genesis block and you'll see Chancellor approves another bailout or something. I don't know exactly the quote, but it's what happened there. So there is no central authority. There is no company called Bitcoin. There is no CEO. There's a community. There's crypto Twitter, very toxic. There's Bitcoin maximalists. So these are people that it is Bitcoin and only Bitcoin. I'm not that, but I am a Bitcoiner. And then there's all the other crypto, right? There's 20 other cryptocurrencies out there. I just saw an article yesterday. There's 12,000 of the 20,000 that are zombie cryptos, meaning projects that somebody did and the entrepreneurs abandoned it and it just kind of hangs out there. And then there's the top 10 crypto. Those are viable by market cap. You know, Bitcoin today is a $400 million market cap, so still very, very small compared to the rest of the world. But there's no owner.
Yeah, I think almost was it past $1 trillion, or
well, when the run-up happened
Yeah,
here
last
last
year.
year, it went past $1 trillion, and then now it's around 400 million. You know, I talked about properties of money, and I want to make sure I don't miss this because this is very important. There's divisibility. So can you take a Bitcoin and divide it? And indeed you can. You can divide it by 100 million. And the unit that is left over after dividing it, just like you could divide $1 by 100, right? Try dividing gold, a bar of gold, you can't, right? So this is an area where Bitcoin is better than gold. You divide it by 100 million, and the unit that you end up with is called a Satoshi, or a sat. And some people say that we stack sats. Just one of those things that they say. The second property of money is recognizability, or status, or the fact that if I tell you, I'm going to give you 2,000 Venezuelan bolivars, I'm originally from Venezuela, so I know this, you're going to tell me, no, I don't want that money, I want US dollars, right? While the currency is recognized by the country, they've chopped off 9 zeros off that currency in the last 30 years. So if you had $1 million 30 years ago, you now have $1 million, you have $0.001 as a result of devaluation and currency management and just corruption and all those things. It happened in Libya, it happened in Argentina. No, it hasn't happened in our country because we tend to run a better government and things are better in a democratic, open, and more controlled society. But let me tell you, the money printing that has happened by the Fed for the last 3 years, they've printed more money than the existing money supply before. That is going to impact us, and you see it today with what's happening with inflation. So recognizability is important. Bitcoin is not as good there as gold or cash, US dollars. That's where Bitcoin falls down. That only changes with time. The more people adopt it, the more it's going to be recognizable. And you can pay at some places with Bitcoin, but who wants to spend their Bitcoin? Right? Why would you do that? The third property, portability. So try shipping $1 million or $1 billion worth of cash anywhere. Okay, I know what you're thinking. Well, I can just go on the bank and do the transaction. Yeah, and you got to pay for that wire. A lot of money. $1 million wire is $1,000 or $2,000 more or less. Okay, so yeah, we could do it with the banking rails. Try moving $1 million worth of gold. Well, we got to get a ship that has a military convoy so that they don't get, back in the day, they had pirates. So in terms of portability, Bitcoin wins because I can send you value instantly over, all I need is a feature phone. I don't even need an iPhone. I need one of those old Motorola Razr feature phones, which that's what they have predominantly in places like Africa, and then an internet connection, and I can send value to you and maintain my wallet. So portability, Bitcoin wins, especially way better than gold, okay? Scarcity, we haven't talked about this, but scarcity. Satoshi Nakamoto set the rules that say that there will only be 21 million Bitcoin. 21 million Bitcoin. That's it. You cannot make any more. You cannot manufacture it. You cannot tamper it. 21 million. Gold, well, you can unearth more gold from the planet, and they say that some of these gold diggers are thinking about going to the asteroids because asteroids and planetary gold is plentiful. And never mind, I just talked about the money printer. So clearly, scarcity, Bitcoin wins. And then the final property is durability. So if you're stashing cash under your mattress, or if you buried it in your backyard, if you come back to it 30 years later, probably that cash is going to hurt or going to deteriorate, or maybe a mouse got in there or whatever. But over a period of time, gold and Bitcoin win. Cash, there's an issue with it. Okay, I know what you're thinking. Yeah, but the cash is in the bank. Yeah, I know. And it's inflating as you speak. So where would you rather have your money? On an asset that is deflationary and has a fixed supply that nobody can change. So those are the 5 properties of Bitcoin. There's a few others that, but those are the 5 main ones that people track and people talk about. I'm very familiar with those 5. There's others, like, for example, the fact that it's permissionless. So as long as you have a TCP/IP connection and a phone, you can connect and transfer Bitcoin, and you can do that without asking for permission. If you go on PayPal, you're going to have to tell PayPal who you are, right? So I would say that's where some of the people say, oh, but Bitcoin is only used for money laundering and criminals. Yeah, it has been used for that, but cash is used way more than that, right? A bag of cash is just as good. It's completely anonymous to give you a bag of cash.
Yeah, those are pretty important tenets to understand when trying to break this stuff down. So when you mentioned a few times now, we've already mentioned value, right? So value, and so I'd like to break that down. So what is value in the Bitcoin network, and then what brings value to it? Like why do we all look at Bitcoin and say this has value? Because that's one of the things I hear from a lot of folks that aren't as familiar with cryptos or with how markets maybe work in general, or even how value is distributed. So how does the value happen on chain, and then how does it happen in the world?
The value that is placed on Bitcoin is the value that is, one could argue it's speculative value. It's the value that you place on it and you're willing to pay for it, as opposed to what some people criticize it for, which is, well, it doesn't generate any cash flows. So if you run around and find an investment professional around this place or across the street or wherever, they'll tell you there are no cash flows that get created. There is no profit that gets created. It's just based on 2 people that are exchanging value because you buy it off of an exchange because you think it's cheap at 19,000 like it was at today compared to 60,000 or whatever it was, right? So the value is in the eye of the people that participate in the market. Now, what's valuable about it? I just told you a few of the properties. The fact that I can send and receive value instantly, and it's cash, it's bare, it's settled without going through an intermediary. Okay, again, if I go down the street and offer you a bag of money, would you take it from me if you don't know who I am?
I don't know. I can't.
When I said if you don't know who I am, you pause there. Why? Because you don't trust. You don't
Right.
trust. You don't know if that money is real, if there's a camera. I mean, you don't know what's going on here. What do you mean you're going to give me $1 million in a bag, right?
Right.
But if somebody tells you they're going to send you $1 million worth of Bitcoin, would you take it? Absolutely.
Absolutely, yeah.
Absolutely. Yes. It's
Or even if they sent it
somewhat
to my bank.
anonymous. Yeah. Right. Right. Because trust on the Bitcoin network is based on math. It's based on cryptographic math. That's the only thing that creates trust. Where we're sitting here, trust is created by the logo, by marketing, by regulatory filings, by leaders. That's why we trust Chase Bank. That's why we trust PNC, because they are regulated. They are banks. They do the right thing. They have a culture. With Bitcoin, none of that exists. The only thing that creates trust is math. And that math gets created as a result of using energy. You've heard of Bitcoin miners. That energy that gets expended gets turned into value, and people value that on the network. So those kinds of things is what creates the value of Bitcoin. But, for those of you in this room that are saying, yeah, but it's still speculative value, it's no different than tulips or no different than, a home, one could argue, is also, that's not a liquid asset, and it's based on, your neighborhood and can you find a buyer. So it's somewhat similar. You don't have cash flows off your house unless you have a second house and then you rent it and do Airbnb. Right. Okay, there's value there. But try selling the house versus try selling your Bitcoin. I can sell my Bitcoin right now over the phone instantly. There's value there. It's very liquid.
Yeah, and I mean, you could look at different currencies like you're talking about as well, even though there's certain amounts in circulation, depending on the governing bodies, depending on the logos, right, depending on who's there, how much is being printed, or the trust that's needed, right? Those are all potential failures in a system of value.
Well, I'm not going to sit here and talk about whether the Fed and the fiat currency and all that stuff and how that could potentially be on the route to failure, because again, that's just an opinion. Certainly some scholars are talking about that. Then there's the Keynesian economic school of thinking versus the Austrian economic school of thinking. I mean, there's a lot of stuff. We could spend an hour talking just about that.
Sure. Yes, you mentioned miners, and that's something that I think is interesting, because a lot of people hearken this new blockchain innovation and a lot of the crypto innovation happening as the Wild West. So I think it's very fitting that just like the gold rush in the United States and all the analogies of Bitcoin as digital gold, I think it's very fitting that there are these miners, and I think that's maybe one of the beautiful parts of the solution that Satoshi has made. So when I tell people that there's Bitcoin mining, or I've been mining Ethereum, which now you can't mine anymore, they just look at me with a strange face, and they're like, well, what does that even mean? So you're talking about creating energy and providing something we in Bitcoin call it proof of work, right? So how is that related to miners? And are the miners the ones that do they go in and get the digital gold or the Bitcoin, and do they bring it out, or how does that work?
Okay, so there are let's see. Bitcoins get manufactured or made as a result of the process called mining. And that's just a term to make it analogous to the same as digging in the dirt looking for gold. Okay, there is no digging of anything. Bitcoin mining includes a process called proof of work. Proof of work is the process of running through a bunch of cryptographic puzzles. So the computer will actually start guessing these puzzles. And the moment that somebody guesses the right number, literally that's all it is. It's guessing a number, solving a cryptographic puzzle. The moment you solve it, that means that you as a miner, you're going to get a reward, which these days I think stands at, 50, 12 and a half, 6 Bitcoin, I think is where it stands these days. And that reward gets halved, or what's known as the halving, every 4 years. So if you look at the issuance of Bitcoin over time, it looks like a stepping function where it started at 50 Bitcoin. So if you mined Bitcoin back in 2009 when it started, you would get 50 Bitcoin as a reward for the proof of work to create new Bitcoin. There's also rewards for running transactions and doing the block. But let's talk about mining. So the miners are a bunch of computers out on the network that are securing the network and also creating new Bitcoin. When they create this new Bitcoin, they do it using cryptographic puzzles, and they have to expend energy, physical energy, in order to do it, and that's how that process works. There's other ways to do proof of work. That also happens to be the consensus algorithm to make sure that all the computers are aligned and in sync and all that other stuff. So mining is these days, mining is a very, very expensive thing. You know, we used to just run miners like in your house. These days, there's mining farms, meaning rows and rows of specialized computers that, you know, it's not Windows or Apple. You know, it's running exactly the operating system needed to be very, very tightly optimized to do the mining. Because the faster you solve this cryptographic puzzle, you're the one that gets the reward. That's kind of how it works. So it's really like an arms race of computing technology. You know, when China banned Bitcoin back last summer, I think 30 or 40% of the mining capacity went to zero. And that capacity was basically imported, a lot of it, into the United States, to Texas and Wyoming and Miami, or South Florida. And one of the things that happened is many of these miners looked for electricity sources that are green. So in Texas, you know, when you have like an oil well and it flares gas, you've seen that, you got the gas flaring. They're taking that flaring of the gas, which is waste and damages the environment, and they turn it around and power a Bitcoin miner and mine right there on the oil well. There's other mining operations that put their electricity behind the meter. So like in a water, what do you call that? A water, where the water creates energy. What do you call that? A dam, like a dam. And you put the miners behind the meter. And you make a deal with a dam to get the excess electricity, okay? Now, don't get me wrong, and for those watching online, I know what you're thinking. Okay, Carl, but what about all this news and media stories about how Bitcoin is bad for the environment? Well, compared to other coins that have other consensus algorithms, like proof of stake, which Ethereum just went through the conversion, indeed, Bitcoin uses 1% of the world's electricity in order to secure the network. For those that write that that's too much energy to secure the network, okay, that's your opinion, but Christmas lights use more electricity around the world than Bitcoin. Are you going to stop people from putting up Christmas lights? Dryers, your home dryer where you dry your clothing, they use less of those in Europe. They tend to hang their clothing. But in the U.S., a lot of people have dryers. Dryers in the U.S. alone use more energy than Bitcoin, the Bitcoin network. So this is a relative thing in terms of its usage and green and the environment. Will it catch up to Bitcoin, and will we have enough regulatory pressure to change it to a green network? Maybe. But if you believe in Bitcoin and you believe in proof of work and you believe in the mining structure, I believe it's here to stay.
Sure. I have one more question about mining, and then we'll move on from that. So when you're talking about China banning mining and how all these mining and the amounts of miners decreased to a certain amount, and then now we're finding that other places are starting to pick up the slack. So what's to stop someone from maybe coming up with some energy innovation that can use very little energy in order to power these miners? And so what could happen then when, like you're saying, there might be a race, so some sort of race to do this? So what would happen if maybe certain groups of people, or maybe even one group or entity, then has incredible amounts of power in order to control, let's say, I think we know some people might be familiar with the hash rate, right? Controlling it. So what would happen? Yeah. What would happen if China didn't ban it and they went the other route and said, no, we're gonna now try to be more than 50% of the actual miners? And
so let's just add some clarity. In order for you to hack or take over the Bitcoin network, you need to have 51%. It's called a 51% attack. You have to have 51% of the hash power, the mining power, out on the network. That will likely cost you billions of dollars for you to have that capability. And in order for you to do that, what you would earn out of it is to double spend one transaction, because you would get caught after that one transaction and then kicked out of the environment. Okay? So yeah, you can go spend $50 billion to create your own 51% of the mining or the hash rate. Hash rate is the amount of these cryptographic puzzles that you can solve per second, and this is in the millions. For what? To do a double spend? A double spend means if I send James money, I can send Cullah the same money. Kind of like when we used to do double spend on music when we had Napster. I know that hurts your feelings, so you're a musician. But remember when we used to send music around and you just rip a CD and then you send a copy of that to somebody else? Don't tell me you didn't do that.
I did it.
Yeah, okay. Money is digital. I mean, Bitcoin is digital money. And what prevents you from copying that Bitcoin and sending it to somebody else and keep sending it over and over and over? That's called double spend. And the Bitcoin algorithms solve that double spend problem. That's also known as a Byzantine generals problem. It solves it with this consensus mechanism that we just talked about and having the miners. So, if you're a miner and you want to, if you're in China and you want to have 51% of the network and have a global collapse of Bitcoin, good luck to you. You're going to have to spend a lot of money, and you would only do one transaction, because after that you get caught and off the network.
That's good to know, yeah. So I have a couple more questions, but we're going to open it up also for questions.
Well, raise your hand if you have a question, and we'll talk. And
yeah, I got one more question for Karl, so you guys get it prepared. And I don't know if they're able to pass the mic around still to when everyone's ready, but I just kind of want to take a step back from Bitcoin and talk about cryptocurrency as a whole. We've been talking a lot about cryptographic proofs and cryptography and how that secures the network and stuff. So we're starting to get a little understanding of what makes Bitcoin unique as a cryptocurrencies. But talk about what is cryptocurrency then, and how does that relate to money? How does that relate to Bitcoin? What are the differences?
Okay, so Bitcoin is Bitcoin, and some people will argue that cryptocurrencies is cryptocurrencies and Bitcoin is not a cryptocurrency. It is, okay? Those are these maximalists that talk about this, that Bitcoin is not a cryptocurrency. However, there's a big difference with Bitcoin in that it is decentralized. It is trustless. It is permissionless. It is freedom money for the world. Okay? The other cryptocurrencies are businesses that are running on top of this technology to create, hopefully, some utility. So for example, some of these cryptos out there, like Chainlink, they create utility in that they are a data integrator, known as an oracle in this world, a data integrator to bring real world data, think of like weather information or sports scores or whatever other data that doesn't live on the blockchain, like a VIN number of a car, and they bring that in a kind of like a certified way that this data is the real data. Because again, if you run a transaction leveraging that data of the oracle, of the data integrator, and that it's not really 70 degrees, it was 60 degrees, and you're going to pay a claim based on that data, and it's an automatic claim that you're just paying. You're wiring the money based on what happened, a smart contract. That could spell trouble for you, right? Because you cannot undo the transaction. You cannot undo it. So it's one of those things that there's 20,000 other cryptos out there, but there's only one Bitcoin. And crypto as an industry will continue to evolve and continue to innovate, and there's projects out there, crypto projects, that have value and create value and have utility. And if you're going to get into those, only top 10, top 20, make sure you see the Kardashian news this morning. I saw it on the news.
Yeah, I saw.
It finally made mainstream news. This happened on Monday, where Kim Kardashian was pushing on her Twitter a crappy version of Ethereum called Ethereum Max, and now she got fined $1.2 million for pushing it and promoting it. And you shouldn't do that. That's illegal, and there's regulatory rules about that and compliance rules about it. But there are 12, I think 12,000 cryptos I heard that do nothing. They're zombies. There's only maybe 20 to 30 that I would say actually have real good live use and utility. You're actually creating some utility with the project you got going on and distributing music in a way that it's free for all. You're using crypto for that, right, Cardano?
Yeah, Cardano, yeah, which shares a lot of commonality with Bitcoin in a lot of ways. The way that they manage the transactions and the consensus is very similar.
But it is proof of stake. It's not proof of work.
It is proof of stake.
It is more modern. That's another thing you'll hear about Bitcoin is, oh, Bitcoin is a boomer coin. Okay. Okay, but you're dealing with money. Would you want the latest, greatest, slick innovation with your money? Or would you rather have steady Eddie conservative with your money? There's some things you want to innovate around. There's others you may want to leave alone.
Yeah, so you mentioned smart contracts, and now we're talking about proof of stake and maybe some other different types of cryptos. So did anyone ever try to make a contract on Bitcoin? Do you know any of that? Or because
there is a couple of companies that have built another layer on top of Bitcoin that support smart contracts. I'm not real familiar with them, but you got to remember, blockchain for Bitcoin is a layer 1. Ethereum is a layer 1. Solana is a layer 1. There's other layer 1s. The actual blockchain network and where the settlement happens. But innovations have already started to happen where there's layer 2s and layer 3s. Okay, you may be asking, but what's a layer 3? Visa, the act of swiping your card, is a layer 3. Do you realize that when you swipe your card, there's like 3 or 4 banks that are talking to each other? Hey, yo, this guy just charged $100. You got $100? Yes, I got $100. Okay, then the next bank. Hey, I got 100. This guy just charged $100. And that money travels through all these banks, just confirming the transaction. That's why when you swipe your card, it takes 2 or 3 days for it to be, it goes from pending to settled or confirmed or whatever your bank says. With Bitcoin, the moment that once they also say you can't buy coffee with Bitcoin. Okay, why would you buy coffee with Bitcoin to begin with, right? We're maybe 20, 30 years away from that. But if you can wait the 10 minutes or so for the settlement to happen, you have final settlement. There is no going back. There is no undoing that.
Yeah, no delete.
No, there's no delete. There's no delete.
Well, if anyone here has some questions,
well, let's get the crowd engaged.
Love to get. I know everyone has a lot of things to say.
How are we doing on time? Oh, we got time.
Yeah, we got some time. Don't be shy.
Yes, sir.
When is the next Bitcoin bull run?
If you subscribe to the 4-year cycle theory, and I do, what happens is you have a halving, then you have a bull run, you have a run up because you get a supply shock. And if you know supply demand, you know how it works, right? If you're issuing 12 Bitcoin every time and now you issue 6, it won't take too long before the supply shock happens and the price goes up because it's supply and demand. Okay? So there's a halving, then there's a run up, which the past 2 times it was a blow off top. This time it was a rounded top. So history sometimes repeats itself, but in other times this year it fooled all the experts because everybody thought it was going to go to 100,000 and it stopped at 69 and it kind of whimpered its way down and people were still saying in January, oh, it's coming back, it's coming back. Never did. So there's a halving, a run up, a bear market, and then a reset where it's the accumulation time for people, and then another halving, etc. So it's a 4-year cycle. That's how it works. The last halving was in April of 2020, and the bull run started really, the run up started in, say, September, October of 2020, and then it made it to 69 in November of 2021, and now we're in this crazy bear market. By the way, it's the first time Bitcoin goes through a macro bear market where the S&P, the Dow Jones, did you see the Bank of England just bailed out? That thing going on. Anyways, so it's the first time this happens, and look, Bitcoin is holding up. Not to say that it could go further down, but it's holding up pretty good. So the next halving, I believe, is in the spring of 2024. So you should expect a big run-up kind of going into 2025 and through 2025, and then the next bear market. So that's kind of the timing of it. However, bull markets, you make good money in bull markets, but bear markets may make you filthy rich. Okay? Now's the time. If you have extra dollars laying around, I wouldn't do your rent money. I wouldn't do your food money. I wouldn't do your financial aid money. I wouldn't do any money that is important. Because if it does go down more, and it could, then you're going to be, oh my God, what am I going to do with this money, blah, blah, blah. Right? And I don't want to hear it. That's your own fault. But if you do have extra money laying around, and you want to experience the growth over 4 years, and there's not a single person on the planet that bought Bitcoin 4 years ago that's in a loss. 4 years. Once you get past 4 years, it's up from there. We have a mic back there. Once you're done with the mic, we're going to pass it over to you. Right. There's people online, and they got to hear the question. Sir.
So you kind of touched on this, but around, the thought process of Bitcoin being the choice, the currency, money of choice of
the
ransomware,
the most pristine asset out there.
Yeah,
yes.
in terms of ransomware and other nefarious activity.
Okay.
So, from the standpoint of it being unrecoverable or, untraceable and helping to promote these type of activities, what are your thoughts around that?
So it's semi-private. The FBI and the CIA and the other law enforcement have gotten smart enough that they have tools, and there's blockchain navigators that allow you to figure out, okay, who the heck bought this Bitcoin? You can figure it out. It's harder than, say, calling Chase if I'm the authorities and saying, who has this bank account? And immediately they'll say it's this guy, right? Because you have to KYC, KYB, do all that stuff. So, yeah, it's not a good situation when on the media they cover the hack of an electrical company in California and the ransomware software that they use uses Bitcoin as payment. That's not cool. That doesn't help the Bitcoin narrative, but that has nothing to do with Bitcoin. That just, cash settles more nefarious transactions than any cryptocurrency on the planet. Okay? If you're going to sell me some drugs, I'm probably going to show up with a bag of cash. And cash is anonymous, and cash is immediate, and cash works. Good luck trying to take that cash and putting it into the bank. Not going to work. So, no, it's not a narrative that some of us like, the fact that the ransomware, the virus people use crypto as a form of payment. I just got one the other day. This guy's, I have your email, and I know everything about you and all this other stuff. And it was a spam, or what do you call that? A phish. And he gave me his Bitcoin address. You know what I did? I sent him 0.00000, like 1 Satoshi, just for the fun of it. And just tell him, I'm not going to do it because I'm on camera. But okay, can we get the microphone over here? And I welcome any and all, and then we're going to close out. I have some final remarks that I'll share. Yes, sir.
Hi.
Hello.
Carl, myself.
Yeah, I like your name.
Thank you. I like yours too. So I wanted to reference the part where you said that you felt like nowadays Bitcoin is seen as the boomer coin. I work full time. I work full time in a DAO, and so my question is, because I don't know, how is governance ran on Bitcoin, if there is governance at all?
There is a core developer network. There's a governance, and there's people who vote on it. I'm not a part of that, but I do know that there's some amount of governance across a community that is distributed, and that's how it works. Yeah. It's not a DAO. No, it's not a DAO. Yeah.
How do you feel about using like wrapped BTC for you to get liquidity in other chains?
I don't. So wrapped VCC. BTC is the actual ticker symbol for Bitcoin. Wrapped BTC is Bitcoin that is on top of other blockchain networks. I'm not a user of it. If you're going to buy Bitcoin, why not buy the real thing? That's what, just like these ETFs that do the Bitcoin futures, if you're going to get into the market, why are you doing this on paper? Do it with the real deal. That's how I see it. However, I do own some Ethereum. I'm a fan of Ethereum. I think Ethereum is a great product, and that's a whole nother session that we could have. And again, what Ethereum does that Bitcoin doesn't do is it has an application layer. Okay, Bitcoin doesn't have a true application layer. And if any of you is a programmer or have an iPhone, you know what apps do, right? Little icons on your phone, right? You know what a phone was like without an application layer. That's Motorola Razr.
The question I got is, what do you think? How long will it be before more, with what's going on in El Salvador, where they said it's legal tender now.
Yeah.
So and they have it, and then there's MicroStrategy that has it on its balance sheet.
Yeah.
So where do you see? I mean, I have my opinion, but when do you think like local municipalities will take advantage of it, and hold it on their balance sheet, and then the security that's needed for it? I think we're probably a long way away from the city of Milwaukee being able to adopt something like that. But what are your thoughts on that?
Yeah, so I believe that we need to go through the generational shift that will happen over the next 20 years. So youngsters like you have to take power. They have to become part of a power structure, as opposed to whoever is powerful today is still living in the fiat world and doesn't want to take the risk, right? Especially if they're getting closer to retirement. Why would they take a risk? What happened in El Salvador is they got a very young president who had a vision and wants to fix the country, and they indeed adopted Bitcoin as legal tender, and so you don't pay taxes when you liquidate your Bitcoin. You can just pay, and you don't have this. They also created a fund to handle the volatility. We didn't talk about, we talked about this one. What are the risks of Bitcoin? Like, what could go bad? We haven't talked about that. Maybe somebody can ask. But young president with a vision, wants to improve his country. He's a big fish in a small pond. Let's be real. The Northwestern Mutual has a bigger market cap than the country of El Salvador, right? I mean, revenues, I think $20 billion GDP. So it's going to take some more time. But there are some municipalities that have adopted Bitcoin. I've seen some in the news. There's, I think, one more country that has adopted it in Africa. But it's going to take more time. It's going to take more mainstream development. It's still somewhat of a techie thing, like creating your own keys and managing your own keys and doing all that is still, I've helped many friends do it, but it's still going to take more time. If you ask me what's the time frame that I'm thinking that's going to take, I believe 2030 to 2040 is when we'll start seeing mainstream adoption. Remember, we're going through 3 S-curves at the same time. And if you know what an S-curve is, it's kind of like an adoption curve, okay? When you have the early minority, then or early adopters, then the mainstream adopters, and the late adopters, and there's early, there's all that, right? S-curves, you could read all about it. We're still going through the store of value S-curve. So Bitcoin as a legitimate store of value. It's kind of hard to, if you're conservative and you're worried about your money, and you're more towards retirement, or you're running a city that, doesn't want to live with that volatility, it's kind of hard to say that it's a really true store of value. But for some it is, like MicroStrategy. They don't care. They're just buying Bitcoin, putting it in there, and you'll see it grow. The first S curve is the store of value S curve. That is what we're living right now. We got another 5 to 15 years to go before it becomes mainstream. The second S curve is medium of exchange, meaning I can go to Amazon, which is, let's just use that as a proxy, and I can pay with Bitcoin at Amazon. Or I can pay at any store like El Salvador, where legally you have to accept Bitcoin. And then the third store of value is unit of account, meaning, okay, when you talk about 30 Satoshis, you don't know what that is. But if I say $30, you know exactly what that is. So we got to get to unit of account. That's maybe 20, 30 years out. Medium of exchange, a little sooner. And store of value, we're living it right now.
Yeah, I think we got time for one question, then closing
Yeah,
remarks.
okay. Yes, sir.
Yeah. What's your thoughts on the legacy financial institutions and their involvement with like ODL and cross-border payment solutions? I don't know if you followed the Ripple lawsuit at all and what's going on with that. Yeah, I'm just curious. It seems to be like less decentralized in some aspect, but
Yeah, so XRP, Ripple is what you're talking about?
yeah, and it's a top 10 market.
Yeah,
type
it's a top 10 coin.
And it's held up through the lawsuit.
It
so I'm
focuses on cross-border payment. It focuses on, global payments. Many banks have subscribed to them. I'm not too familiar with them. I don't own any XRP. I just know there's an SEC case against them, and that SEC case is lingering.
Yeah.
There was a comment from SEC Gensler
Yep.
that he was somewhat leading to believe that it was going to be over soon, and it pumped 40% or
Yeah.
30% or so. So I don't know much about that. I would personally, I'm staying away from it because I don't want to take those risks. I'd rather put my money into Bitcoin or Ethereum or Cardano or another coin.
Okay.
Having that cloud hang around it for 2 years now, I think, is
Yeah.
difficult for me. But if it does clear and it goes from 35 cents to $2, like they say, great for you.
Sure. Okay. Thank you.
Okay.
All right, let's wrap this up.
Yeah. So again, none of this is financial advice. I have one question before I let you say your last remarks. So I'm curious, again, not financial advice. Where do you see Bitcoin, the price in U.S. dollars? Where do you where do you see the price going in the future? I won't give you a date, but what?
Okay. So under the, I cannot tell the future. Okay, that is a fallacy, and neither can anybody in this room tell the future. You're talking about a price of a commodity or property that fluctuates every single day. So I would say, given that we're in a bear market, be careful with the downside because we could see $11,000 Bitcoin or $10,000 Bitcoin here in the next 3 to 5, 6 months. Okay, so be careful with that. I'm not saying don't be tweeting. Carl said, you're right, right? But there is some potential downside, or it could just go up from here, right? So I'm not going to predict what the numbers are going to be in the short term because that's meaningless. I can give you a number and it's going to be wrong. But what I will tell you is this, and I said it before. If you buy Bitcoin and you own it for 4 years, you're going to be ahead. If you own it for 8 years, you're going to be way ahead. And if you own it for your legacy, think of it like your retirement plan, you're going to do just fine, especially the youngsters that are in this room. However, if you look into the future, I do have some ideas that would tell you, or some models that would tell you that by the next bull run, the top of the next bull run is going to be 6 figures. So today it's at 20,000. In the next bull run, which I told you was 2025, 2026, kind of dying out, maybe 2024, somewhere in that range, we will get to $100,000. I feel very confident about that, and it's only up from there. I will give you this math, and I did this math today at my desk. Let me turn it around. You can see how prepared this is. Gold, which is what this is competing against for some, the thesis is this is electronic gold. Gold is a $10 to $11 trillion market cap today. $10 to $11 trillion today. Bitcoin is $400 million today. Okay? So if Bitcoin starts to emerge as a standard like gold and people are using it to put their money and just park their money there and do nothing but leave it there. So if you want to compete against that market cap, call it $10 trillion just for round numbers, right? And you have 21 million Bitcoin. Call it 20 million for round numbers so that you and I can do that mental math right here in the room. That would put Bitcoin between $450,000 and $550,000. It's 20 today.
For one Bitcoin.
For one Bitcoin, it's 20 today. So you got to be patient, and I wouldn't be putting your rent money into this, right? I wouldn't put in your financial aid money or school money. But if you have $10 a week, if you have $20 a week, if you have $100 a week, just dollar cost average in. And there's plenty of models out there that show you that if you dollar cost average in over 4 years, you're well ahead of schedule. Here's another way. That was like a top-down version of it. Here's a bottom-up version or another top-down version of it. So global assets is 900 trillion. That's stocks, bonds, real estate, cash. All the assets on the planet is close to whatever happens after a trillion. I don't know, but it's 900 trillion. Quadrillion?
Yeah, I think
Maybe.
quadrillion.
If you take 900 trillion and you say you allocate from that base of assets 5%, just 5%, 5% of 900 trillion is 45 trillion. Divide that by 21 million. 45 trillion divided by 21 million gives you 2 million per Bitcoin. Now that seems outlandish. That seems ridiculous. So let's take a 1% allocation. So let's say, where we're seated here today, across the street, all the financial managers out there finally come to the realization and they say, let's just put 1% of total assets that we have. 1%. If you do 1%, 900 trillion divided by 9 trillion, 1%, gives you a $400,000 Bitcoin. It's 20,000 today. I'll leave you with that thought. Thank you. Thank you.
Yeah, thanks everybody.
And remember, tech is deflationary.
Right.
It's deflationary. We didn't show the video, but that's okay. Thank you.
Yeah, thanks you all for coming.
Thank you. Thank
Enjoy
you.
the rest
thank
of your
you.
tech week.
Glad we prepared.